What's up, guys? It's Nathan here. Will the property market crash in 2023 or are we set for growth? Today, we have Brett Warren from Metropole joining us. We're going to look at the Brisbane property market outlook for 2023. Brett, welcome to the show.
Good to be with you again.
In 2021, we saw Brisbane house prices soar at the steepest annual climb in 13 years, and we've seen growth slow in parts of Australia, while Brisbane, well, it had continuous growth, strong performance at the start of this year, and we've even seen prices started to fall from their peak, but the market has done so with a significant lag compared to the rest of Australia. Brett, why is the Brisbane property market so robust?
If you go back 5 or 10 years when there was not a lot happening in Brisbane, but I think the big answer, Nathan, is really what's happening around town. And you only have to look out your back window there. There's some buildings going up and things. It's really the infrastructure, it's the jobs creation, and it's actually a lot of people moving to Brisbane. So I think, we had around 7,000 people around the average for the quarter. And that's huge. I mean, Melbourne and Sydney were probably struggling a little bit because they were all moving up here. The borders were closed. And I think we were insulated a little bit from the whole COVID thing with lockdowns and things as well, which was having more people come up here as well, creating more demand for property, more market depth in the great locations. And as we can kind of see, there's been a bit of a lack of supply. And while the market's cooled probably in the last 6 months, the property market certainly hasn't dropped. It's stayed quite, robust as you kind of explained.
What's going to be happening with property values for units, townhouses, houses? What does it look like?
Obviously, the houses have kind of come back a little bit. The market there is definitely starting to soften. Townhouses and apartments are still relatively strong, Nathan. The reason I would argue is because, as prices get larger, people have to probably move further and further out. And they're not wanting to do that. There's going to be a tipping point where at some stage they don't want to keep moving further out. So rather than moving further out, they're sacrificing the size of a house and moving into a townhouse or an apartment. So once the housing market kind of cooled off, it was the townhouse market that actually picked up and started moving quite strongly. And then once those values kind of got out of reach for the average person and they didn't want to keep moving further out, they come into the apartment market. And that's actually been quite strong in the last 6 months. Our apartment market hasn't done a lot for the last decade, but it's certainly starting to change as the affordability issues start to bite and people still want to get in those nice lifestyle precinct and high demand locations.
When you're looking at the Brisbane housing market forecast for 2023, what does it sort of look like and what do you guys foresee happening?
Yeah, we subscribe to SQM Research, which is Robert Louis Christopher. He's published a number of articles recently. I guess it's really going to depend on a couple of things, isn't it, Nathan? We've got inflation at quite substantial highs. We've got interest rates as well. Unemployment's at a really low level, which is really positive. So there's a number of dynamics you've got to consider there. He put together a number of cases. Probably the most likely is where we saw an interest rate yesterday. We're probably likely to see another interest rate early in the new year. If that happens and inflation starts to get under control, it'll just return to a normal market. I don't see there being much growth. They've anticipated between about 1% to 5%, which is really just a normal market. The second opportunity, and what can happen quite often with the RBA, is they overshoot the runway a bit. So if they do raise another interest rate, inflation does drop and fall back a little bit, then they may drop interest rates. And if that happens, they're suggesting there could be 3 to 7% growth, and that could lead to a bit more growth in the Brisbane market. And then there's the more dire, scenarios where inflation doesn't get under control, employment starts to become a problem. And that's when they start to get into negative territory with price drops and things like that as well. But it's interesting, Nathan, probably 3 months ago, the media would have jumped all over that and said property prices are going to drop 10 or 15%, but now they're actually being quite positive, and there's a bit of a positive spin on the market at the moment, which is quite good for the media for a change.
What are some of the drivers that help the Brisbane property market grow?
For me, it gets back to jobs growth. There's more jobs being created, more tier 1 and tier 2 jobs in the market at the moment. Particularly, you have to look around the Queen's Wharf project, Brisbane Metro, the Cross River Rail System. There's a number of bridges being built, the airport's expanding. So all those kind of big jobs are really bringing people from interstate and overseas as well. And you got to think about it, Nathan. A lot of young people who maybe have just finished university, very, very well educated from the country or the city, were often moving to the big city of Sydney or Melbourne to take up those kind of jobs. But now they're being created here. They're kind of staying put as well. So it's creating a bit of a cap, and it's probably a lot of demand. I guess the other thing to discuss is affordability. And there's a bit of a joke probably about 12 months ago that you could probably buy 2 properties in Brisbane compared to 1 in Sydney. So that's probably down to 1.5 now, given the latest amount of growth. But affordability is definitely a driver for people who are in the outer suburbs of Sydney or Melbourne, and having the ability to move to a fantastic city with great weather. I'm sure you will agree it's the best place to live in the world. They can live more of a better lifestyle. They're not on the outskirts. They don't have to travel out to work each day. And that's a real draw card for a lot of people, and why I guess a lot of that was brought forward in COVID, wasn't it?
We saw a lot of that during COVID, and that affordability piece makes a great spot for homeowners, first homeowners especially. But what about investors? Is Brisbane property market got a good yield?
Because I know investors do chase yield. Obviously, compared to Sydney, Melbourne, 100%, we're seeing stronger yields in these kind of markets, particularly for houses in blue chip locations. We're probably looking around the high 2s to low 3s for a house in a really, really good location, which is quite good. The other thing to consider, and it's probably hitting the headlines a lot more at the moment, Nathan, is the fact that we're in a rental crisis. I guess the upside, or it's not a good thing to brag about, but the upside for investors is that although interest rates are going to rise, rents are also going to rise in the future at some stage, and that's going to help buffer. And definitely Brisbane does have that superior yield play over a Sydney and a Melbourne, that's for sure.
Do you think the market, you talked about there's 3 or 4 different scenarios Lewis Christopher looked at. Do you think the market will crash in 2023 for Brisbane?
I definitely don't think it'll crash. I don't think it will. I think, look, even if the worst did play out, you've got to understand the bigger picture in terms of, people still have a job. They can still pay their mortgage. I think there was this statistic released by one of the banks recently to say most borrowers are probably 2 or 3 years ahead on their home loans as well, because they kept paying at a higher interest rate. So the only time you'll have a problem with that, with the crash, is when people don't have a job, they're forced to sell their properties, and there's no buyers there, and the market just really drops. And that's what's probably going to start to happen to some of the regional areas, the outer areas and locations where, they don't have the home buyers and people in good, secure jobs and things like that as well. So although we're definitely seeing less people in the market at the moment and less buyers, there's also substantially less stock. And you'll note that there's not a lot of distressed sales at the moment. And that'll probably start to change as interest rates rise and things like that as well. But I just can't see that the overwhelming big picture fundamentals are still really, really strong.
When do you think the right time to buy will be?
Yeah, look, I always believe the right time to buy is when a person's ready to buy. If they're thinking longer term, they're not thinking 2 or 3 years. If they're thinking 10, 15, 20 years, whether you buy now or in a year from now, it's not going to make a big difference. But in terms of ready to buy, look, I think we're definitely buying a lot better than we were 6 or 12 months ago, Nathan. The emotion's gone out of the market. We'd pay a fair price and someone would come over the top and pay $40,000 or $50,000 more just to get that property. And we're not seeing that. So property prices haven't really dropped, but the emotion's gone out of the market. And again, it's going to depend on what happens next. If interest rates do stay where they are, if we get inflation under control, there may be a drop. If it does return to a normal market, then I guess there'll be a lot more competition. So I think we're buying better than we were 6 or 12 months ago. And we're probably going to be buying better in the next 6 months than we probably will in the next 12 months when the market does kind of recover and get back to a bit of normality.
What are some reasons to invest in the property market in Brisbane, looking at the demographics, the layout, the infrastructure, the economy, the population growth? What do you think some of the catalysts that make it make sense for an investor or even an owner-occupier?
Yeah, well, firstly, you've got to understand the Brisbane market intimately, and certainly, with the geographically, it doesn't have the urban sprawl of a Sydney or Melbourne. I know a lot of Sydney and Melbourne investors have been caught out and buying in, 30, 40 kilometres from Brisbane. That's probably not Brisbane to start with. And secondly, you can probably get away with that in Sydney and Melbourne because there's much more of an urban sprawl, but we've got to get a lot closer. So we only really focus on that 10 to 15 kilometre ring maximum, inner to middle ring suburbs. They're the kind of locations you want to buy into the more affluent locations. I think the good news is that there's a bit of a question mark about what happens next with all this infrastructure and all these projects happening in and around the CBD. What happens next? What happens once all these projects are complete? Well, as you know now, that's actually been answered because we're getting the Olympic Games in another 10 years. So I feel there'll be another round of infrastructure building and planning and more jobs being created. That affordability, the jobs are going to start driving more people to Brisbane. I think Melbourne and Sydney are probably more of old world cities. They're capital cities. I think Brisbane's going to become a bit more of a new world, a new modern city. And Brisbane, historically, when I arrived 15 or 20 years ago, was a bit of a country town and probably still has that label a bit. But you only have to look around now. It's really starting to evolve and change. There's more modern, contemporary residences coming in on board. There's bigger overseas companies coming in. We've had Virgin come in, Boeing come in. And I'll start to think that we'll probably see a lot more of that as well as Brisbane starts to evolve. So I see a huge opportunity in the next 10 years, that's for sure.
What are some promising areas in Brisbane if we looked at an entry-level suburb versus a mid-range suburb, or a suburb you considered bulletproof within that 5-kilometre ring? What do they sort of look like for investors and owner-occupiers out there?
Yeah, so if we start around that 10 or 12 kilometres where I think there's really good value at the moment, I think there's a couple of rules you have to look for. You have to look at a really good school catchment. I think something that we haven't been very lucky with tunnels and things like that as well in Brisbane, we haven't had the problems that Sydney or Melbourne have had, but that's going to change moving forward. So infrastructure and train lines are going to be important. So we look at areas like Capera on the north side, which has got a good train line. On the south side, potentially areas like Mansfield and Wishart, good school catchments. Chermside West is another good one. Chermside's probably a little bit busy. It's going to become a bit of a mini CBD, so it's probably going to be a bit too busy. But just to the left, you've got quiet pockets, tree-lined streets, and they're the kind of things we like. As we start to come into that kind of, that 5-kilometre ring, the Cannon Hills, the Kedrons, that next suburb out, Toowongs, are just starting to evolve a little bit as well. They've got great public transport. There's good demand in those areas for school catchments, and there's not much supply there. So you can't just knock over and build another 100 houses or find another parcel of land. So that's going to keep a lid on things, but the demand's still going to be quite strong. And then we get into the kind of bulletproof areas, the New Farms, Tenerife, Ascots, Ashgroves. And I guess my tip for the next 10 years, I know there's a lot of people tipping Woolloongabba at the moment, Nathan, but I think there's going to be a lot of physical growth there rather than capital growth. It's a very, very busy location. It's going to host a lot of the Olympics, and there's going to be a lot of infrastructure, a lot of new projects. I'd actually prefer to go one suburb out to Dutton Park. It's not very far away, but you're still going to get all those benefits. It's going to be a lot quieter. And if you follow the headlines, there's obviously a new school catchment out there, which is supposed to take some pressure off Brisbane State High, which is an amazing catchment, and people fall over themselves to get into that suburb. The only issue with Dutton Park, it's such a small suburb, it's so tight to get in. But I think if you can get into those types of locations, you're really going to benefit in the next decade.
And what are some key tips for buyers looking to get in the market? I know you've talked about intrinsic value, properties that are outperforming the averages. What does that all look like, and what should people be looking out for?
We rarely buy brand new. We never, ever buy off the plan. You're generally paying premiums and things. We want to buy something with a good, strong land component. So, land to asset ratio is important. Land's the part that goes up in value. So there's no point buying an apartment with 300 in the complex. It's got a very low land component. But it's all right to buy an apartment in a small boutique complex of 6 or 8 or something like that, where there's a good intrinsic land value. There's a bit of rarity and scarcity and things like that as well. And then getting back to the cliche, they sound cliche, Nathan, but really good school catchments is going to become more important. Good infrastructure is more important. I've got a few years on you, Nathan. When I grew up, I think we only had one coffee shop around the corner. So, if you haven't got 5 coffee shops and 15 takeaway restaurants now, nobody wants to live there. Having that lifestyle, the walkability, they're really, really important. People don't want that delayed gratification anymore. They don't want to drive and get a coffee. They want to be able to walk. So we talk about a 20-minute neighbourhood where everything's within about 800 metres to a kilometre and within walking distance. So those kinds of things are going to be very, very desirable for people moving forward, and investors really need to take note of that. Moving further out into house and land and areas that are a long way away from those types of things are really going to struggle, particularly in the next 5 to 10 years.
It certainly sounds like Brisbane has a promising 2023 ahead. Brett, did you have any final words or any final thoughts you wanted to share with our viewers?
No, look, I'm really excited. I'm a big fan. I love Brisbane. It's great to see the city changing. We've had a pretty tough decade prior to what's happened here. And I think the next decade is going to be a lot more positive. Brisbane has a bit of a habit about skipping a decade and then doing really well for the next decade or so. And if the Ducks align, we've got the Olympics at the end. Geez, what an amazing decade it's going to be. So whether you're looking to get in now, 6 months or a couple of years from now, I think it's a great opportunity as long as you're following the fundamentals, follow the big majority trends and get into the right locations. I think most people are going to do very, very well.
How can our viewers get in touch if they're interested in your services?
Yeah, look, I'm on Facebook, obviously, LinkedIn. You can hit the website, metropole.com.au. I'd love to sit down and have a chat about your goals. By the way, we don't start out with buying a property and doing things. We like to set people up and put a strategic plan in place and help them plan for their future as well. So I'd really enjoy the opportunity to work with any of our clients.
Thanks, Brett, for joining us today.
Great to chat, Nathan. Thanks for your time.